generator of capital gains is making purchases. So actually, one of the interesting things about crypto, not only is it an asset, but you actually can technically use it to make purchases. So for example, you purchased 3 units of coin A back in June of 21 with a total value of 150. So each coin is worth about $50. And last week, you spent 1 unit of coin A, now valued at $100, for a nice dinner with your spouse. So is there a capital gain tax liability? The answer is yes, because coin A appreciated or went up in value for $50 since the acquisition date. So even though you're making a purchase with it, right, the IRS sees it as an asset that's being disposed of rather than, spending money and incurring like sales tax. It sees it as an asset that's being disposed of. So incurring capital gains tax, right? So now we can start to see the value of why the IRS changed the question from acquiring, did you acquire any cryptocurrency to did you dispose of any cryptocurrency? So that's starting to become more and more clear. Okay. So then some other cases are like an initial coin offering, like an ICO. And by the way, an ICO is very similar to an IPO in the stock market. It's literally the same thing, but for crypto. So for example, you invest 5 units of coin A that's worth $10,000 into the ICO of coin B. And with that investment, you receive 10 units of coin B, which are then valued at $15,000. So at the time of that transaction, you incurred a $5,000 capital gain, which is of course subject to taxes. So that's how an initial coin offering generates capital gains taxes. Jungmoon asked, would that mean if someone donates in crypto, when getting that to be tax deductible, it would get calculated as the value at the time of donation versus the time of coin purchase? You mean if they donate for the initial coin offering?
So to clarify, like when people, because you know how like donations can be tax deductible, and if someone decides to donate using crypto, how would that get calculated? Like depending on what the price of the coin is at the time of donation or when you purchase the coin?
This is interesting because it's actually not considered a donation, because a donation would be considered like donating to like an actual like nonprofit organization. So if you donate to like a 501(c) or something, then that's considered as a donation. But also there is a bit of something called like consideration. So you're investing with the prospect of getting something in return. So it wouldn't be considered as a donation. Does that make sense?
Wait, even if like, so for example, I'm not sure if this is an actual thing, but like if an NGO decides to accept crypto as a donation.
Yeah. So are you asking about an ICO or asking about something else?
No, like separately. Sorry. Like it was a question from the last slide.
Oh, making purchases?
Yeah. So like, cause when you make purchases, we were talking about like the difference, and depending on the value of what it is, then you would still get capital gains tax. Would that also apply to like donations and tax deductibility?
Yeah, making donations is one of the ways that you can dispose of your currency without incurring a tax liability, because it's a donation, and it kind of works in the same way that donating, money would work. It has to be to like an NGO or something like that. And, obviously you can't get anything in return. So like in this case, they're getting a nice dinner. But so if you donate crypto to an NGO and, it's obviously like a donation, you have proof of donation, like a receipt, then it's considered a donation. So there's no tax liability, and it's actually tax deductible because it's a donation.
Yeah, and the value at the time of the donation. Yeah, we use that value. Not the time of the coin purchase.
So then quick follow-up is like, I'm not familiar with the concept of having tax deduction based on the donation. So let's say if you donate, this is, I guess, not crypto specific, but if you donate $10,000 worth of crypto, does it offset your capital gain of $10,000 that you made on crypto transaction?
I don't believe so, because I think you can only deduct your losses, but you can deduct donations from your income. So if you itemize your deductions like that on a Schedule A.
Gotcha.
Yeah.
Thank you.
Thank you.
And on top of that, about donation, if you still take a standard deduction, you can still get a little bit of deduction from it. For tax year 2020, you could still get up to $300 income deduction, even if you don't use itemized deduction on Schedule A. But starting from the tax year 2021, which means that if you are going to do your tax return this year for 2021, you can still get deduct up to $600, just to let you know, out of donations.
Oh, gotcha. Thank you, Bishop.
Thank you. So, all right. So we talked about the ICO, right? And then margin trading. So let's say so for margin trading, you invest, let's say $5,000. And then on top of that, you also borrow $10,000 from the exchange in order to purchase 3 units of coin C, which is valued at 15,000, right? And then 3 months later, you sell the 3 units of coin C for a now total value of $20,000. So that gain of $5,000 would be subject to capital gains taxes. And then one thing to note for margin trading is if you take out a loan, you're also going to incur interest. So for all, just for throwing out a number here, let's say in this example, you incurred $100 of interest on the loan. There's, of course, no tax liability that you need to pay on that $100 of interest. And you can actually deduct the interest from your total income when you choose to itemize your deductions when it's time to pay your taxes. But that would be more of a conversation that you or one of our clients would have probably with their tax preparer, just so you know. So yeah, if you make a lot of crypto donations and you have interest and you start deducting your Schedule A kind of can add up. So that pretty much covers margin trading. All right, so that's everything for today. And if you have any questions, please leave a comment. Thank you.